Look, no disrespect to Mark Zuckerberg. Sheryl Sandberg's the smartest person in most rooms she walks into. So I don't think that decision was made lightly. And I don't think it's over, spending on a wedding or whatever nonsense. It's just a recognition that, oh, man, we're now committed to spending a decade dumping billions of dollars into something that may or may not turn into a product. And all of our core businesses are under assault. I don't know that that's such a great setup. The redesign of Instagram is not being well received. TikTok is not going to stop pulling attention away. The core Facebook brand is it's almost like the Macarena at this point. Like it's like if somebody says they did or said something on Facebook, you almost half think that they're joking. So that's a very tough position for the company to be in. That's why it's 50% off its high. And I don't know that one quarter turns things around, especially when you consider that they're trying. Go ahead.
Yeah, forgive me. Let me interrupt you. Julia Borson has Meta as we speak. Julia.
Scott, Meta missing on the top and bottom lines, reporting revenue of $28.82 billion versus the $28.94 billion that analysts estimated. Earnings also missing, coming in at $2.46 versus the $2.59 that analysts had estimated. Also looking at daily active users, the daily active users were a slight beat, 1.97 billion. DAUs just a hair ahead of the 1.96 billion estimated. MAUs are a miss, 2.93 billion, a hair lighter than expectations. Revenue guidance coming in lighter than expectations. The company is saying third quarter revenue will be between 26 and 28.5 billion. The analyst consensus we have for third quarter revenue is 30.5 billion. So that guidance is coming in light, and we see Meta currently trading down nearly 6%. Scott?
And the thing you were looking forward to most of all, I think it's fair to say, Julie, is the revenue numbers. They were expected to post the first ever decline. Did they, in fact, do that?
Yes. So the revenue did decline. So it was really the revenue growth rate is declining. So that's the question. And revenue did come in lighter than estimates. So this is the first time in Meta's history that the revenue has declined. So that's something to watch there. But also, to me, the fact that the guidance is light, that's likely the factor that's most weighing on the stock right now.
Gotcha. Appreciate having you. Julia Borson, thank you. We'll talk to you again soon. If, in fact, you need to pop back on, please let us know. Stephanie Link joins us now. She, of course, is CNBC contributor, Hightower Advisors, chief investment strategist, owner of Meta shares. So your instant reaction, have you had time to sort of soak it in? DAUs beat, MAUs miss, that revenue guide was lighter, and then the big deal, again, that first ever decline in revenue growth.
Yeah, okay, so the whisper number for revenues was actually 27 to 28 billion. So they come in at 28.8 billion. I think that's a bright spot. The guidance also lower at 26 to 28 billion, but the whisper was that they would have to lower it to 27 to 29 billion. So kind of in that range, a little bit light. DAUs better than expected. I want to see we got to hear what they have to say about Reels and Messenger and the growth and the monetization and the path going forward there. But the other thing I want to hear is about OpEx, because that's where they actually can move they have a lever to pull, right? So the OpEx, their guidance is for 87 to 92 billion. I would not be surprised to see them lower it to 84 to 86 billion to just to soften the blow on the revenue line. None of this is surprising to me. Guess what? Alphabet was not that good yesterday, but it was down so much into the print that it was able to rally. Microsoft, actually, I would argue, was actually better than I expected, and I understand why that rallied. But we know that this quarter for Meta is the toughest comparison for the year. We also know this is the third quarter in a row of IDFA challenges and the changes that they've seen, and they're working on that. So going forward in the second half of this year, you're actually going to be able to see, I hope, better momentum against easier comps. We also know that slower GDP is hurting ad revenues. We get that, right? And we also know about competition. But I think this company is still able to post a 3% DAU number, not so bad on the MAUs either. And let's just see what the engagement numbers are, because that's what's going to be more important to see if people are leaving the properties and still going to TikTok. And they probably are. But let's see what the momentum is going to be on the real side going forward.